Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. Let's start off with just the biggest headline of the day, and that, of course, is going to be your NVIDIA earnings that came out after hours yesterday. And if you're like me, you're kicking yourself for not... Well, okay, here's the thing, is I can't kick myself that hard. I basically called that NVIDIA's earnings was going to be a killer report. And I was looking at the options chain yesterday, looking at calls on NVIDIA. And I even was looking at the ones that were like $360 calls, and they were like 26 cents. And I was like, yeah, but it's not going to go up 20%. Like, these calls are still too expensive. Here, look, I'll prove it to you guys. I'll show you. Well, actually, all right, look. Let's see if I can share. I'm going to try to share my text messages without sharing anything else. All right, so I'll show you guys right here. Texted my buddy at Matthew yesterday at 1:23 p.m. I'm buying QQQ calls that expire tomorrow. NVIDIA reports earnings today, and the earnings are going to be good, which will bring up the entire tech market tomorrow. But the options actually on NVIDIA are too expensive. And then I texted him after the earnings came out, basically like, told you so. But basically, I thought the options on NVIDIA were too expensive to buy yesterday. Clearly, they were well worth it. I could have bought the ones that were like 20 cents and still made a bunch of money. I did buy those QQQ calls, so I ended up making a decent decent amount of money. AI hype seems to be not sticking after morning hours. So here's the thing, and I mean, I talked about this last Benzinga Live that we did with NVIDIA, that I've been trying to add it to my long-term portfolio. Been waiting for a dip that doesn't seem to be coming. I mean, I was talking about trying to wait for a dip when it was at like 300. Now we're at basically 400. But it's for a lot of different reasons. I mean, again, like the AI hype could be running out of steam at some point. But you see today, whether you're looking at Alphabet, Google, you're looking at NVIDIA, whether you're looking at AMD, the hype still seems to be out there. But for these semiconductors, it is, to me, like the story is about AI long term. But NVIDIA's strength was in its data centers, which again are going to benefit from the boom of AI, and you can see that here. But what you also have to consider is that right now semiconductors go in virtually everything, whether you're talking about cars, whether you're talking about washing machines at your home, dishwashers, you name it, it takes a semiconductor. And that's why I think like NVIDIA, what's its market cap at right now? Basically $1 trillion. I still think like I've been waiting to buy this into my long-term portfolio. I might buy some today, even though it'll probably dip another 20% from here, just knowing that in the long run, this thing is probably going to continue being a monster, considering the fact that everything out there right now needs a semiconductor. NVIDIA is the leader in the space. Taiwan Semi, the leader in manufacturing for that space, up 11% today. We were talking about TSM the other day on the show, that this one could be, kind of lagging behind the other semis. You look at the SMH Van X Semiconductor ETF coming back up to this critical level of April 2022. So back where we were basically a year ago before this huge drop. I mean, we are a ways off these bottoms from November, when, if you guys remember, I mean, interest rates were rising. No one wanted to touch growth. No one wanted anything to do with NVIDIA, with, anything growth or tech related. Look at this chart. Look at this weekly chart on NVIDIA. I mean, this thing was going basically straight down from $350 November 2020 or November 2021 all the way down to about 100 flat. And here's where, I mean, I think if you're not a technical trader, if you're not, someone who's super into charts, which, full disclosure, I'm not the biggest like chart guy in the world. I like looking at the charts. I've learned a lot from different guests that have come on to Benzinga Live and other shows here at Benzinga over the past couple years about technical analysis, about how to read a chart. But this is what I do find interesting, is such a psychological level, right at basically $100 flat is when this thing bottomed, October, November 2022. So that was what, about 6 months ago, and has literally just been on a rocket ship up since, taking out previous all-time highs. I mean, you looking around the tech space, right? Microsoft has been strong on the heels of AI and ChatGPT. Still not near its all-time highs. Apple has been pretty strong over the past few months. Still not at its all-time highs. Google, same story. Virtually every tech company out there that you want to look at has been doing well over the past 6 months, 5 months or so. Netflix here, still way a ways off its all-time highs. But NVIDIA, on the other hand, has absolutely smashed through it on this killer report. We were trading slightly off its all-time highs. And again, I mean, like, this story for NVIDIA, for AI is long, is not even close to being over. We're probably in the first inning. However, do I still expect some sort of pullback on NVIDIA at some point in the next week, 2 weeks, 3 weeks? Yeah, but I've been expecting that. I was expecting it at 300. I thought it was going to come back down to, 250. I thought it was going to roll over here, get it. I was going to be able to put it back into my Roth IRA at 250. Guess what? It's at 388 now. And I mean, looking at a 10-minute chart here, looking at a 5-minute chart here, it is buyers. I mean, it's not like this thing just went straight down off the open and hasn't been able to recover. There's demand out here for this stock up in the high 380s, which to me, I mean, is telling that people who are out there that are not in NVIDIA right now are willing to FOMO buy this stock. And again, like, my thing is it going to come down right or at some point? Is there going to be some sort of pullback? Probably. Do I feel comfortable saying that? Yeah. Do I feel comfortable also saying that from that pullback, it'll continue to make highs? I think so too. Easy Mike, Bava to cut staff. Yeah, I mean, like, that's a red flag, I think, and the stock is, like, trading down on that news as it should. But when you think about it, I mean, like, over the past few, we've seen Meta run a lot, and part of Meta's story in the past few months has been that it's been able to cut costs. And why does this chart look like this? I feel like that's just, like, incorrect. Like, I know Meta was higher. All right. Quick rundown for the show today. We will have Mr. Steve Kalyjian joining us here in a few minutes. And then later in the day at 12:30 p.m. Eastern, we'll be talking to Ivan from Adam Finance. So excited about that one. Let's take a look at how some of the sectors are doing today. Energy getting absolutely clobbered. So I think that's, basically, I think could be to be expected, considering the fact that so much of the money is flowing into tech and in names like an NVIDIA right now that you'll probably have some outflow from the more value sectors. You're looking at the XLF down about 0.6%, XLE down more than 2%, down nearly 2.5%. Berk B not really having a great day. Where's that at? Berk B continuing to move lower. Unity Software down 5%. So I guess it's not all tech that's up today. Speaking of Unity, which, by the way, I mean, I don't hate the look of that chart. Man, still a forward PE of 75 on Unity, even after the price is all the way down there. How's Roblox doing, by the way? I have not heard basically anything about, I'm not talking about the stock. I'm talking about, like, the actual, like, company Roblox. Like, I've not heard the same amount of buzz of, like, people with kids who are talking about their kids playing Roblox all the time, or let me know in the chat if you have a kid who plays Roblox. Have they been playing less Roblox, more Roblox? Do you hear about it as much as you were? Man, yeah, you're right. Let's look at I'm just gonna go to Robinhood because I feel like that's the easiest way to oh man. Tesla puts are getting hammered. I think Tesla's got to come down a little bit. I do have a theory on Tesla as well that I'll get into in a second. Jay, you're so right. I should have thought about that yesterday. I played the QQQ calls because, like I said, the NVIDIA options were too expensive, which, by the way, ended up working out really well. But I mean, look at this. So these specific calls, the 120 AMD calls that expire tomorrow, they're up $1.38 for a total price of 146. That means they were trading for 8 cents yesterday. 8 cents, which really means, of course, $8. But I could have bought, 10 of these and it'd be worth for $80 and it'd be worth over 1,000 today. So next time, Jay, you're right. And next time NVIDIA or something is reported. But here's the thing is like these reports, I mean, this was like a 10 standard deviation move. These reports come out once every few years. It's it reminds me of you had a few to the downside in recent years with like Meta or Netflix with these huge the downside where they dropped like 20% overnight, and if you were holding puts way out of the money, then you're up like thousands of percent overnight. But those don't. I mean, the reason that the IV's up and stuff is because a bigger move is expected on earnings. Just typically not a move that goddamn big because holy cow did that thing rip after hours. And I actually so I bought the QQQ calls, was anticipating a big move to the upside. Checked NVIDIA's stock not long after. It was probably like 4:10 like most of the time. Usually those earnings come out, I want to say, within the first like 5-10 minutes. And NVIDIA's stock was actually trading a little bit lower after hours. And I thought the earnings had come out and it was just like down 2% off the earnings. But I guess it came out like 5 minutes after that. So, alrighty, guys. I see Mr. Steve Kalyjian hanging out backstage. So for our first guest of the day, let's go ahead and bring on Mr. Steve Kalyjian. Give him our very special Zinger Nation welcome. And see what Steve's been watching. Mr. Steve Kalyjian, how you doing today?
Hey, Aaron. Good morning. How are you?
Good. I'm good. Good to see you. So what's on top of your mind? I mean, the biggest story of the day, I was just talking about NVIDIA's earnings. That's been the thing that I think most people are interested in today.
Yeah. So obviously, the rest of the markets, excuse me, is not cooperating. I still have sells here on the diamonds. I still have sells here on the Russell. Yesterday, we had some pretty big buy divergences in the market on various stocks: Apple, Microsoft, Goldman, all the big Amazon, NVIDIA. When NVIDIA was trading on the 298 level, Tesla as well, making around the 179 level. I saw these big buy divergences, and once the S&P hit that 4114, and they rallied, and then there was a really big buy divergence on the Russell that really helped the market as well. And then they rallied up about 20-30 handles after that, and then all of a sudden around 340, you saw NVIDIA was trading around the 299 and change, trade up to 307, pull into 304, and the minute it pulled in and the S&Ps and NASDAQ exploded, I said, somebody has leaked the number. This is going to be a phenomenal number. I'm not a tape reader, but with 40 years experience, I saw that and I said it, and a lot of people jumped in on it. Like you said, they bought some really way out of the money calls, and it's just amazing. And then right after the bell, boom, up 90. You could just see. I mean, how does a stock rally like $8 in like 9 minutes without no news? And somebody just got wind of it. And if you look at even the 1 minute or 5 minute chart, it was just an explosive rally. The Qs ran almost $2 on that, and then I got a buy reversal on the Qs, and I said, that's it. These earnings are going to be phenomenal. And then we had this big gap up this morning, and then we actually had some sell divergences on the S&Ps, and then right after the opening, the S&Ps were trading 66 pre-market, and then bam, right down to 37, almost dropped, 30 handles here. So it's only a select few names here that's really participating here. So if you're in that sector, again, these are names probably obviously to be buying back on pullbacks, okay? But on the overall market, I think the S&Ps are telling you that there's bigger problems here to come.
Yeah, we've been talking about that a lot on this show, that I think like this, any strength in the market over the past few months has really been driven by a few names. I mean, to you, is that like a red flag in the market, something you're concerned about?
I just see that the market's been in this range for like the last, what? We've been in this range for like the last 5 weeks, 41.30 to 42.50 range, 41.30. So we're in a 100 handle range here. Sooner or later, it's going to break out or break down. I'm thinking break down. Now, you may get some pop here if they get this resolution on the debt. If you look back, 102 times they raised the debt ceiling, so 103 times wouldn't surprise me, and they're going to get it done. It's just they're posturing right to the last minute. But Janet Yellen said that by June 1st, the Treasury will run out of money. But overall, I just think that this is going to get resolved. One of the things I want to talk about really quickly, I don't know if you saw what happened about 3 days ago or so, was when the S&Ps were trading 42.26 and they literally dropped to 41.91. And you saw this fake explosion. It showed an explosion at the Pentagon. And then the Pentagon 5 minutes later came out and reported it was not true. It was a certified, from what I read, from what I was told as well, a certified Bloomberg account that an AI put out about that story. So everybody talking about AI, better be careful here going forward with this AI. And I just think there's a lot of headwinds here.
Yeah, we did see that reported on that here at Benzinga the other day, the fake AI explosion that caused the market to move. Let's see if we can find, I'll go to a 5-minute chart here on the SPY and try to find that. I want to say that was Tuesday, right?
Was it Tuesday, I believe?
Yeah, I think that might have been like right here. So Steve, are you actively, like short here? I mean, we got this push up fight.
I came in long some SQQQs that I positioned a few days ago, and I kicked them out a little premature the day before, just knowing that NVIDIA's earnings were coming out, and they shot up from like 25.11 up to 27. And then I saw some big buy divergences, which obviously means sell divergences in that. And so a couple of guys I know were long it, and I told them what I saw, and they liquidated a lot of their positions up there. I think this is a great way to play the markets, these ETFs, when you think there's extremes in the market, long end or short. And I think that with what you're seeing with the NASDAQ, obviously, with these core, out of 100 names, you got 10 of them that are really ruling the market, the Googles, the Microsoft, the Apples. And so basically what you're going to see here is, even if we get a decline in the market, I think the NASDAQ's going to outperform, because AI is here to stay and to be talked about for the next years to come. So I think these are names to be buying. I mean, you think back when AMD had their earnings, the stock traded out to 81 on bad earnings. Now the stock hit 120 today. That's insane in less than a month. But this reminds me of, doing this for almost 40 years. This reminds me of, blow-offs. So, I think that there's better opportunities. I think you'd be foolish to be buying names like this up here. But, it could be now that there are certain names to be buying if we do get any weakness in the market. And these are probably the names. The crowd's too heavy in them. And so when they decide this, everybody's selling, they're all going to pile in and sell at the same time. So it can be ugly on the way down, but maybe a better buying opportunity for others.
Yeah. I have a weekly chart of the Russell 2000 here, the IWM tracking small caps.
Sorry.
All good. When do you expect, the tides to kind of shift on small caps and to see the IWM start to show some life and maybe start trading up a little bit?
I think the Russell's really going to lag here because it's heavily weighted with the regional banks. I think the regional banks are are far from out of the woods. Remember, there's 4,500 regional banks in this country, and some reports I'm seeing that more than half of it could be in trouble. The higher interest rates stay at this level, it's worse for these regional banks.
Yeah, so I mean, I think that's, but so my thing on that is though, I think is if you do start to see more cracks forming, you start to see another bank fail, maybe two more banks fail, I do think that makes the Fed more likely to stop cutting rates or to do something. You know, I think like the quicker that happens, it's almost to me like worse the fact that it's like dragged on and there's so much uncertainty surrounding the regional banks as opposed to just knowing, okay, are they going to be able to survive or will they need some sort of help from the government?
I think it's going to be more than one bank, Aaron. I think that I think it's going to be I think it's going to be more than one bank, and I think what's going to happen is that it's going to be a domino effect. I think in June the Fed's not going to raise rates, but I think that remember they are jumping up and down like a pack of baboons, saying they got to get inflation back to 2%. I don't think that's happening anytime soon. So I think the more you print money, the more you're doing what you're doing with these stimuluses and all this nonsense. Right now, you have it at probably about 5%. CPI down from 9. I mean, 9 was an extreme, a 40-year high. So 5 seems like, from 2 to 5 is a gigantic number. And that means you probably have to push rates to 7.5%. They're not doing that on the Fed funds. But I think they'll keep them here. And I think you're going to start seeing cuts in the second quarter of 2024. And again, I know this sounds crazy, but I think they're politically driven. And I think that they're going to start doing something like that in the presidential election year.
Interesting. What about, I mean, in terms of like any other sectors do you like or dislike? Do you have any thoughts on the energy sector right now? XLE trading down about 2.5% today.
The reports everybody's talking about the year 2035 that 85% of the vehicles will be, electric. I don't know. That's reports I've been reading. Crude's, hit the high 83 or so 82. Hit the low of, so we were in a 20 handle range, 63 to 83, something of that nature. I just think you're in this range. I don't think crude breaks 50. But I think that if the market gets kabooshed, these names are going to follow. And I think that's, again, if in that sector, I think in all honesty, the sector I would be looking for buys are the names that are reacting to any news in AI, and there's only like 10 of them or 12 of them, 15 of them, whatever. I think these are names to be trading from the long side. Overall market, I think, looks horrible. The breadth is just horrible. The Dow can't get going here today. The Russell, I think, is in trouble. So I think that it's this could be a selective time. But if you think you'd be buying these names up at these levels, you're insane. It's insane. It's insanity.
Yeah, it looks like the why is it moving here on Benzinga Pro that we have says major indices are higher following strong earnings from NVDA and better than expected U.S. economic data. U.S. House Speaker McCarthy said negotiations have made some debt ceiling progress, but said he does not know if they will have a deal today. So despite this news that there may be some sort of debt ceiling negotiation today, the Dow, like you said, is still down 0.6%. I assume because energy is getting crushed hard today. You look at USO, the U.S. oil fund down 3.4%. I wonder, I mean, like, why else the oil price might be dropping. So there might be some recession fears or some, COVID fears in China. I'm not sure.
I think that I think that people don't want. I think you're in a period of stagflation. So it's not just the word recession. Recession is when obviously you see complete weakness here. You still have a strong labor market. Housing numbers came in better. New home sales came in better than expected yesterday. So I think that they're in a bind here. I don't think you could just use the word recession. And if we get a recession, I think it's going to be not a soft one. It's going to be a hard one.
Interesting. Well, what do you have any key levels on the S&P 500 that you're
I think we're going to
right
retest the lows this year sometime. I do think that. What's going to cause it? It could be the start of a weak labor market. Home prices starting to, with the high interest rates here, you can see, people stop spending and waiting for better prices on homes. So that could start the downfall here. And I do think the regional banks are in trouble. They don't want to say it. They're trying to keep it out of the headlines. The higher these rates stay, these regional banks are in trouble. They all got caught on the lows here. And so I think that this is something that's going to be a major problem in the months ahead.
Got it. So, yeah, I mean, we're at about 413, we'll call it now, 412.99. And you think we're coming back down to this around 350 level?
I think we'll retest the lows, yeah. Also, if you look at the PE ratio, we're at a 23.6 PE. It's pretty high here.
Yeah, I mean, I wonder right now. I feel like there's been some appetite to hold stocks. I think there might be some people that are loading up on the anticipation that soon the Fed will be done raising rates. I'm not really quite so sure that they are. I've seen today, in fact, that the CME watch tool, which tracks the probability of the Fed's next rate hike, is now about 50-50 for another 25 basis point hike, after it was basically like 90% a couple days ago that the rate was going to stay the same, and now it might go up even further.
I don't think they're raising in June.
I don't think they are either, and I didn't think they are, but now I'm saying the watch tool, like the way the bonds are trading and stuff, it seems like there's now an anticipation that that's a legitimate possibility.
Well, look what you did. Rates went up by themselves. I mean, the bond market 2.5 weeks ago was trading 132.5. It's 125 and change. They dropped 7 points. That alone, the price is going down. Interest rates went right through the roof on that. And the market's shrugging it off. This is going to really hurt the regional banks. I'm just telling you.
Yeah, I mean, no doubt. We'll keep watching that. KRE, the ETF that tracks the regional banks, down another 2% today. Looking at the weekly chart here, no real love going on in the regional banking land. Well, Mr. Steve Kalyjian, it's always a pleasure to have you on Benzinga Live. Thanks for hopping on with us today.
All right, Aaron. Thanks, guys. See you next week. Have a great day, everybody.
You as well. All right, y'all. That was Mr. Steve Kalyjian. We've got the regional banking ETF KRE pulled up right here. Q's. Your Q. Looks like we've got some life going on in the Q's past 2 minutes. Wowzers. Look at this little candle popping up here. Definitely running there. Can we get back up to the previous highs of the day? That is the question. I don't know. I mean, like this thing, it seems like there's some, again, appetite to own stocks out here. I don't know if it's just FOMO buying or what's going on, but certainly some strong price action. And I don't know. I mean, here's the thing is I think you'll have some FOMO buying. You'll have some people that are getting into the rally right now, getting into NVIDIA, getting into the QQQs, getting into AMD that were not part of this move. And then you're also going to have a lot of people who are trying to short those names. And if those names don't start to move lower and you have all these people that are short, then they start to cover. I'm not saying we're going to have like a GameStop short squeeze on the Qs or on NVIDIA, but I'm just saying that it could impact the price action, this, need to cover if these names continue to move higher. Because look, I promise you right now, there are some people out there thinking there is no way in hell this thing is moving any higher when talking about the Qs. Look at it on a daily chart. And we are, I mean, look, we just passed this level. I would say like 345 from a chart perspective. Looks like we have some potential resistance right here. I would say a few more bucks on the Qs before I would even start thinking about shorting this, just because we know the trend is your friend. We know a lot of times in these markets, these names continue to run. Even when it looks like there's no way that they'll keep running, they somehow just continue to run. All right. We've been talking a lot about NVIDIA today, a lot about tech. Let's go to some of our other big headlines of the day. So, of course, the debt ceiling continuing to loom large. Let's go ahead and get one of our beautiful Benzinga.com articles pulled up on this, and we'll do a quick Thursday reading. All right, I'll go full screen so it's easier to follow along. Default X date looms, intensifying debt ceiling discussions. McCarthy says not everybody is going to be happy. House Speaker Kevin McCarthy said on Thursday that debt ceiling negotiations have made some progress, but open issues remain. I don't think everyone is going to be happy at the end of the day. That's not how this system works, he added. McCarthy's remarks came after days of lengthy negotiations between White House officials and senior Republican lawmakers about the need to increase the debt limit before the June 1st deadline. Treasury Secretary Janet Yellen said that the U.S. government may begin skipping payments beyond the X date on Wednesday. Yellen emphasized that if the White House and the House Republicans fail to compromise in time, there will be some difficult choices to make. Less than 150 hours, or around 6 days, separate the U.S. from a debt default, causing rating agencies to start to take action with Fitch putting the U.S. debt on negative watch, possibly pointing to an imminent downgrade. McCarthy also said Thursday he is not concerned about the Fitch ratings watch and that he has directed negotiators to work 24 hours a day to get a debt limit agreement. So it sounds like right now, like the debt it sounds like there's been some progress made, but until we have a decision either way, I don't know if the market's really going to make a move one way or the other. Stocks you missed because the PE were too high for the last 30 years. Amazon, Chipotle, NVIDIA, Tesla, Monster, Salesforce, et cetera, et cetera. Yeah, I think like a lot of times, because here's the thing, is like NVIDIA's PE is so high right now. Okay, well, they just crushed it on earnings. What if they crush it on earnings again? Then the E raises, which makes the ratio a little bit more even. And so you really have to like, if you're focused on growth, I would not even like be worried about. I wouldn't even be really worried about the PE. Sorry, guys. One sec. Just making sure our next guest has links and everything. Alrighty, let's see what other top headlines we have on the home page today. So basically, let's recap debt ceiling. You basically sounds like again some progress has been made, but there's no deal in place. So hopefully, at some point in the next couple days, they'll be able to get that sorted out because again, the market just does not like the uncertainty. It's not. I mean, like okay, the market wouldn't like it if they came out and said they're not going to reach a deal. That the markets or the U.S. is going to default on the debt. I don't know how much SPY drops there. Probably 3, 4, 5%. Not really sure. But at least then the market knows. The market doesn't know what's going on right now. I think the expectation is for them to come to some sort of agreement, as they've essentially always done before, to raise the debt ceiling to avoid this sort of default. NVIDIA still hanging out, up 26%. How's Apple doing today? Apple's interesting right now because I mean it's been strong with the rest of tech. You look at the daily chart here, pushing higher, kind of reaching up toward the top, these tops right here, which it gets to kind of this ominous point for Apple. Is it going to break through these resistance levels, or are they going to reject right here and then move back lower? But the one thing I'll say about Apple is I don't think a lot of this strength over the past few months has been AI driven. And it's hard to imagine that Apple right now, the company with the most cash in the world, one of the most tech forward companies in the world, that they're not going to be involved in AI, that they're not going to be innovators in the space. So I'm not saying that I think Apple's like a top AI play. I think it's going to be, my top AI plays are NVIDIA, number one, Microsoft, number two, Google, number three. But I would put Apple probably like somewhere up there, probably, somewhere around 4 or 5. That, like, look, even if there hasn't been a lot of announcements about Apple AI products or how Apple's going to use AI right now, trust me, it's coming, because if AI is as big as people out there are making it out to be, which I think it isn't right now, I don't think where people are in as immediate danger of losing their jobs to AI over the next year, over the next 2 years. But I think, AI will touch every industry, will revolutionize probably the economy as we know it moving forward in like 3, 4, 5 years. And so Apple is almost 100%. I'm almost 100% certain that Apple is going to be involved in that somehow. They're not going to just let this, let everyone else, let Microsoft, let Google all take over AI, and then Apple's just going to be kind of moseying around. I do not think that's going to be the case. All right, today's top stories from Benzinga.com. Pershing Square Capital Management founder and CEO Bill Ackman weighed on billionaire Carl Icahn and his company following the release of a short report by Hindenburg Research. Ackman commented that there were some interesting takeaways from the unfolding situation. Apple's AI headsets are the future. Yeah, I have seen some promising reports about Apple's AI AR/VR headsets, including one from a former Meta employee that was like, yeah, this thing is like insane. So anytime you have someone within the industry complimenting the product that much, it really, that means a lot. NVIDIA stock skyrocketed immediately after the company reported first quarter. We've talked about this enough today. Grab Holdings Limited co-founder prepared to relinquish her operational and board roles by 2023 end. Tan will transition to advisory role. Co-founded Grab with Anthony Tan in 2012. Airbus bags order for 43 helicopters from Air Corporate, marks its largest commercial helicopter deal in Italy. Okay. Let's see what else we got here. Top 5 tech stocks that could sink your portfolio in May. NVIDIA reported better than expected first quarter, issued strong guidance. Okay, so these are stocks with an RSI above 70. So basically just stocks that from like a traditional standpoint are looked at as overbought versus oversold. All right, so you've got NVIDIA, RSI at 82. Super microcomputer, wow, up 22% today. RSI at 84. Nutanix up 72%. C3 AI up 71%, and then AMD, or sorry, not up 71%. I don't know why I was saying that. The RSI is at that. Sold a $3 put on Grub. There you go. When I bought shop below 30, people said the PE was too high. I'm up 100% because I didn't care about PE. I seen it was at 2018. Yeah, and again, that's the thing is, like Jay said earlier in the chat, there are all these names that if all you did was care about PE, or if you said, "Oh, the PE is too high, I'm not going to buy this stock, I'm not going to buy that stock," you would miss out on a lot of these great investment opportunities because these ratios are really like lagging indicators. Chuck Norris drank one water and the stock's up 25%. Check it out. Which stock is this the alkaline water company? I need to do a ticker crash course because I've been seeing some tickers recently where I'm second guessing what the alkaline water company. Oh, it is up 20. Holy cow. What's going on here? I don't even see any like are you guys kidding about this Chuck Norris thing, or is that really why the stock is up? I mean, can you check PayPal for us? It's at 2017 levels. Yeah, so let's talk about what's going on with PayPal right now. So you might think, okay, this stock looks cheap. The recent report. Let's go to our calendar right here. Go to earnings. I mean, not a bad report, right? Estimated EPS was 98 cents. Came in at $1.17. Estimated revenue was 6.2 billion. Revenue came in at 7. So who is this in the chat that just brought up PayPal? Kadir said PayPal, it's at 2017 levels. So look at this. Stock brought in $7 billion last quarter. Let's go back to 2017. The stock was bringing in $3 billion. So the company's bringing in more than double the amount of revenue as it was in 2017, yet the stock's at the same level as it was. Let's go back to the chart here on PayPal. Let's look at something long. Let's look at a weekly chart here. 2017. You got to go all the way back. So what's going on with PayPal? Well, here's what's going on. The U.S. government is releasing a new service called FedNow. FedNow is essentially a money transfer service that, for all intents and purposes, is free. It's it's basically a like Venmo, PayPal type money transfer. FedNow is a service developed by the Federal Reserve for depository institutions in the United States. It will enable individuals and businesses to send and receive instant payments. Banks will be able to build products on top of the FedNow platform. So when you go into the fees, it's way cheaper for businesses to use this new FedNow service, which I need to do some. I think it's launched. I think. I don't know. Oh, announces July launch. Okay, so it's launching in a couple months. And really, I mean, like, I don't know if it's going to overnight kill PayPal or overnight kill Venmo. Which, we'll look at Square. Who owns? Oh, PayPal owns Venmo. And then PayPal is also a money transferring. You have Square, which owns Cash App. All these things are. Wait, hold on 1 second. Oh my God. PayPal and Square are at like the same exact stock price, $60, almost exactly. Has this ever happened before? Someone fact check this out in the chat. Have PayPal's and Square's stock ever been at the exact same price before? I don't know. Could be interesting. But either way, there's been a lot of insider selling, a lot of Congress people selling, I think, knowing that this Fed now thing is coming. But again, basically to recap, is if you're a company out there, say you're paying 0.5%, say you're paying 0.75% transferring money using PayPal for transactions or using Square or using whatever, and then now you have FedNow, which is offering fees 1/10 of that. Of course you're going to go to FedNow. You're going to do what's best for your company. So there might be some other reasons out there why PayPal stock is moving lower, but I think right now that's the big story why a lot of investors are kind of shying away from these stocks and maybe even selling them or shorting them right now. Just basically saying like, hey, look, we want to see what happens when this FedNow thing comes out, because there's a chance that FedNow comes out and a quarter, 2 quarters later, PayPal is saying, yeah, we lost 25% of our customers. We lost 30% of our enterprise business accounts. I'm not as worried about the individual part of the business, because I think as for individuals, like when I Venmo someone, I don't pay a fee as far as I know. I think you pay a fee on Venmo if you use a credit card, but like if I just transfer $10 out of my Bank of America account to Ivan, who's hanging out backstage, who's going to be coming on here in 10 minutes, if I Venmo him $10, I don't think I'm paying a fee on that. So I don't think there's going to be a big reason for individuals to shift over from Venmo, from Cash App to FedNow. I think it'll really come down to the corporations, come down to the enterprise accounts that, might use, I don't know. I don't run a business. I don't know how I know PayPal offers payment processing, software for companies. I don't know how. I don't think they're paying payroll with PayPal, but maybe they are. I don't really know. All I know is maybe it's for like merchants that are, it's like, so merchants that are buying and selling goods. Say you're selling, your mom's got a good apple pie recipe and you start making apple pies and selling your mom's recipe. And all of a sudden you're selling 1,000 pies a month, making some good money. And you have people pay you through PayPal. Maybe you start having people pay you through FedNow, because, or maybe stores were paying you to buy those pies and sell them in their storefronts. And now those stores were paying you in bulk for the pies through PayPal. You're a small business owner, and now you ask them to do so through FedNow because there's a lesser fee. I don't know exactly, but yeah, that's all I got for you. Whoever asked about PayPal. Sorry, I'll just catching up on the chat. PayPal, another woke company. I mean, PayPal's like they're just money transferring, aren't they? 12 banks are testing. What does that mean? Oh, 12 banks are testing FedNow. Yeah, so we'll keep this. It from when I Googled it, it looked like. And again, this is just going off Google. FedNow is a service adopted by the Federal Reserve for depository institutions in the United States. So it will enable individuals and businesses to send and receive instant payments. But again, like that doesn't really solve a problem for individuals, because like, Spartacus 97 said in the chat, there's no fees for Venmo or Zelle, etc. If I'm already not paying a fee, there's no way this FedNow is going to be, that much easier to. In fact, I'll almost guarantee it's probably going to be clunkier. It's probably going to be less easy. It's probably going to be more difficult to use than Venmo or Zelle, etc. So I don't think there's going to be a big reason for individuals to start using it. PayPal, it's from high 300 to 60. Yeah, I mean, these stocks have been just disasters. I'm not a fan of PayPal. block really right here at all. I mean, look at this, down 80% from July 2023. Sorry, from July 23rd, 2021 to now. Say something nice about PayPal. Okay, it's at a PE of 25, which we were just talking about PE. So it's probably a little bit cheaper than what it's been in months and months past, especially coming off. I mean, you had strong earnings and the price has been depreciating. So typically you don't have those things happening together. You don't have those two things coinciding with strong earnings and the stock depreciating. But when you have that, you'll have the PE drop substantially. So who knows? Maybe you'll have some value investors come poking their head in here and say, oh, PayPal, some value in here. It's probably still got some good cash flow. I don't know. I haven't gone through the numbers. But what I'm more focused on, like the story. What was PayPal's exposure to like the crypto? Weren't they like, what wasn't part of the reason they got up this high back here was because of like Bitcoin? Could be wrong. PayPal looks like Meta from last year. Yeah, again, I've been talking about this. I sound like a broken record. The market does not like uncertainty. Maybe the market might dislike uncertainty more than anything else. And I think there's some uncertainty right now regarding this PayPal FedNow situation. So I think once that comes out in July, maybe it's one of those things where we're making a molehill, or we're making a mountain out of a molehill, where this FedNow thing will come and go and it won't be that big of a deal and PayPal will be fine. Or it could be detrimental to the company. I have no clue. Apple moving up fast. Did they mention AI? No, but we did talk about that just a few minutes ago. I did buy some more QQQ calls just for fun, just because like I was saying, like everyone, I feel like there's going to be a lot of people who I do miss my boy Hugh Henney. He had one of my favorite Hugh Henney quotes or Hugh Henney-isms is when talking about shorting a stock, if you miss the rally, he said, if I'm late to the party, or he's like, I was late to the party, so I called the cops on it. I think there are going to be a lot of people who are late to the NVIDIA party, so they're going to try to call the cops on the party, try to buy some puts, try to make some money on the downside, on the Qs as well. You take a look at how the QQQs are up to the 340 level now. I'd be surprised if you don't have some people coming in here saying, okay, this thing's got to come back to earth at some point. I mean, look at this. It's up 10% over the past month. Just absolutely ripping today. And the more that you have people coming in and buying puts, the more people that might need to cover if the stock does or the index does continue to trade higher. PayPal is not Meta. Yeah, I think the big difference here is you didn't have a type of FedNow-esque risk with Meta. You didn't have a new type of Facebook coming out or a new type of Instagram coming out that could be potentially detrimental to the company. And Meta also, I mean, to Meta's credit, say what you will about the company. I know a lot of people hate Facebook now. A lot of people hate Zuckerberg. To Meta's credit, they've basically done a textbook playbook example of how to kind of cut costs and transition. Basically, Meta was like, yeah, we're the growthiest stock out there. We are building the next metaverse. What is the metaverse, you ask? We don't even know. We're just investing billions of dollars into it, hoping it's the next best thing, because we're a growth stock. And that's what growth stocks do, is we invest in the next big thing. Everyone's talking about Web3. So now we're going to be called Meta, and we're going to invest in the metaverse. Well, when interest rates started rising and the market started rewarding companies that were, focused on profitability over growth, Meta followed suit. Meta fell in line and said, okay, we're not as worried about the metaverse anymore. And in fact, we're going to cut back our spending on the metaverse. We're going to fire these thousands and thousands of people. We're going to do this to maximize profit. And Meta stock has benefited a lot from that. As you can see, I mean, we're up at 254 right now. We were down below $100 around 6 months ago. So Meta stock has done a tremendous job of kind of transitioning from growth focusing on more profitability. And again, like, I don't know if PayPal is going to be able to do that as well. I don't know if any companies are going to be able to do that as well. Of course, we've had Amazon talk about trying to cut costs. I think you've had Microsoft talk about trying to cut costs. But alas, here we are. Man, I can't imagine if my boy Jay Powell really raises rates again, another 25 beeps. I mean, I feel like the bond market's just reacting to NVIDIA's earnings and how high tech is trading here. But I mean, I guess if the queues keep running, you could argue like, shoot, we do need to raise rates a little bit more. I mean, like, NVIDIA up another 30%, PE above like 70 now. Like, it doesn't feel like interest rates are at, decade 15-year highs. SQQQ for tomorrow. See, that's what I'm saying, Megan. I think a lot of people are going to come in here and just try to short tech and short the market, saying like, can't keep going. I'm saying I don't know if I would right now. I would just maybe just wait. I don't really know. I'm not gonna. This is not investment advice. Snow didn't meet expectations. I'm not a big fan of Snow or Datadog or these companies. I just I feel like all the things that these companies are in, like isn't Google and just doing the same thing? Is a data lake. Is that right? A data lake warehousing and sharing company that came public. I don't know, just data companies, I guess. I've never really been the biggest fans of these. I don't really understand the business, I guess, that well. There's probably some data scientists in the chat right now that's calling me stupid, that's saying you don't understand how this works. I don't really know. But, oh, no way. Gosh, darny. I had some Tesla calls that expire tomorrow that I got stopped out of, and now it's freaking running. Tesla is running. All right, I'm going to buy some more Tesla calls that expire tomorrow, just because if it ends up like one of those like crazy Tesla runs, I'm going to be like, you silly goose, you had calls, then you sold them. So I'm buying more Tesla calls. Sorry, guys. All right. I do see our second guest of the day hanging out backstage. We've got Ivan Zlatar. I hope I'm saying that right. Ivan Zlatar from Atom Finance. So without further ado, let's go ahead and give Ivan one of our very special Zinger Nation welcomes. And when we come back, we'll be talking about what Atom Finance is doing and some other thoughts that Ivan might be having right now. All right, Ivan, welcome to Benzinga Live. How are you doing today?
I'm doing great, Aaron. Thank you for having me.
So did I mess up your last name, or did I do that okay?
You did pretty well, man. Not too bad. Zlatar was good. My name's Ivan though, but that was good. It's a tough one.
I should have known with the last name that the first name was probably not just like the Americanized, Ivan, but that's on me.
Yeah, I probably need to just change it to Evan Slater. Make it a little easier for everybody.
All right. Well, before we get started, you want to give us just a brief kind of overview of Atom Finance, what you guys are doing?
Yeah, definitely. Atom Finance, mission of our company, we've been around for about 5 years, been doing the same thing for the entire time. And that is basically trying to help investors everywhere make better decisions, provide them with better information. The way we do that is through a consumer app, which you can download on the App Store. And we also work on the B2B side. We help banks, neobanks, fintechs, companies of all sizes build out brokerage and wealth management front ends. So if you're interacting with an investment front end somewhere, there's a good chance that some of our technology might be involved.
Got it. So hold on, let me pull up is the site's atom.finance, correct?
Atom.finance, that's right.
Yeah, so let me pull this up. So tell me about the app that you have. This is for individuals?
Yeah, absolutely. Anybody can sign up, $7 a month, which we think is a really great price point. We aggregate 15, 20 different data sources. We're going to provide a massive depth of information. So in addition to having all of your fundamentals, we'll actually have entire financial models out there. We'll have full balance sheets, P&Ls, every document that a certain company has had. We can also do portfolio level analytics, provide financial insights. And we've got a bunch of research tools. So it's a really great investing tool. It was built by active traders, some former hedge fund guys, and we really love it.
Yeah, so I mean, what have you found are like the tools, I guess, that individuals like or use the most on Atom Finance that might not be available like directly on their brokerage?
Yeah, definitely. Well, there's a bunch of different stuff. So content obviously is number one. We provide a news feed of which Benzinga is a part. So you guys are a great partner to us. We spend a lot of effort trying to make sure that the notifications we send you and the content that we send you provides signal out of the noise. So rather than just kind of like a large feed, we try to give you the most relevant information that's relevant to your portfolio or the stocks that you're tracking. Beyond that, we have a bunch of research tools. We have stock screeners. That's a really popular one. We have custom indexes, watch lists. So you can look at stuff like electric vehicle companies. You can look at airlines, all sorts of different types of indices. And then within that, one thing that we curate ourselves, actually, we call them business metrics, which is a pretty underwhelming name, but the actual data is pretty fantastic. We will provide you with industry specific data for whatever industry you're looking at. So to use the airlines example again, we'll give you like revenue per seat miles and all those different types of industry specific metrics, provide comparisons across the industry, and let you really dig into specific metrics rather than just kind of like fundamentals of a company.
Got it. That makes a lot of sense. So, I mean, running a fintech company, you've probably heard a little bit about this technology called AI. Any ways that Atom Finance is implementing AI into its
Yeah,
different tools?
yeah. So I've been around fintech for a bit, and so has AI. So it's been great to see the step changes that have happened recently. What I'll say about it is, to us, it's a product shortcut. So we've been using it for quite a while in a bunch of different ways. We use it for recommendations, summarizations, a lot of our financial insights, a bunch of our kind of like middleware and infrastructure. If you're a product developer, it can make certain things, you know, so much easier for you and so much less costly, that it can really be great. But what I will say about it is I think it's really important that you maintain your focus on what you're actually trying to accomplish, which is to solve a problem and add some value to your end customer. I think there's definitely, I've seen just an explosion of companies out there um, that are kind of taking advantage of this chat GPT trend and all the open AI stuff that's been happening. I think that's fantastic. I think it's really important that all of them are making sure that they're actually focused on solving a problem rather than just kind of providing a solution.
So from the developer standpoint, I mean, you mentioned it. I mean, like, is how effective is AI really at like being able to code something? You say for like certain thing, like what's an example of something on the developer side that like AI could help with versus something that maybe okay that it can't, it still has its limitations and cannot do this yet.
Yeah, I think so. We'll use it for like summarization, for example. So if you type in like Microsoft, we can give you the three big things that are happening with Microsoft, and we'll scan thousands, hundreds of thousands of news articles in order to accomplish that, kind of pick out the big things, and then in natural language tell you here's what's going on. That's done through AI. That's kind of, as a developer, it's fundamentally a mix of proprietary technology that you have to develop yourself, and then you can use some of the open source technology that's available as well. But ultimately, it's going to come down to what you're able to create in your own product. So I'd say that out of the box, as a developer, AI can be limited in its scope, but if you're able to kind of plug it into your product effectively, it can be really powerful.
Yeah. So I mean, what right now? I mean, do you expect to be like the next thing that AI is able to do and help out on like a business side that you're not able to do like right now?
Um, it's a great question. So what I would honestly say that I think what AI can do is it's like having a whole team of people just reading a bunch of content and extracting sort of the big lessons or the big points from that content. So it's super useful in that regard for summarization, for recommendation, for finding, like I said, a signal through the noise. So I think you're going to continue to see really great ways in which you can discover information online in a really efficient way by using AI effectively.
Got it. Right now, I mean, like, what a lot of retail investors I feel like are torn. I was looking at the AAII sentiment survey, which is the American Association of Individual Investors, and like people are about basically evenly split, like a third neutral, a third bearish, a third bullish. To you, do you have any insights on like where retail investors stand? Where, like, what are the takeaways do you think people are getting from their Atom Finance content that they're taking in?
Do you mean are retail investors bullish in general, or are they bullish about
Like, do you see
AI?
any trends emerging just in terms of like overall market sentiment?
From what we see, it's very volatile. I don't know if I have a signal for you in terms of positivity or negativity. One that I do remember hearing, I think on a Wall Street Journal podcast, which I thought was interesting, was Q1 was actually a really, really big buying quarter for retail investors,
Okay.
which is a pretty positive signal. Again, I definitely need to source that. But I thought that was pretty interesting because typically with these types of bull markets, you see a lot of activity at the top, but the fact that we're seeing activity kind of toward the bottom as well, I think is encouraging, just toward the sort of the power of the retail investing movement, and its longevity.
Yeah, well, I mean, speaking about the retail investing activity, I mean, can you speak a little bit to just in Europe? I mean, you've been in fintech for a while, like the changes in behavior among retail investors from maybe like from before the COVID pandemic to during the COVID pandemic to now a couple years removed?
Yeah. Yeah, absolutely. And I can do this anecdotally. I think everybody knows that there was like a huge peak there in activity for a while. That tends to happen toward the end of every bull market. What I've seen over the past decade or so are pretty significant changes to access. If you think about just how easy it is to open a brokerage account these days versus even 5, 10 years ago, I think that's an incredibly empowering thing for most people in the country. And then I would actually expand that globally. There are a ton of really, really interesting fintechs and neobanks out there in Latin America, and across the world, that are giving a lot of people their first chance to invest in global markets. And I think that is a really, really interesting trend that is going to eventually be a step change in terms of how many people have access to investing in like the top American companies, for example. And we think that's really exciting.
That is really exciting. All right, well, Vaughn, you got any like hot takes or predictions when it comes specifically to the fintech industry over the next couple years or finance in general?
I don't know if I have a prediction for you. What I will say is it's a really exciting time. I think that there are a lot of really, really talented, amazing people trying to solve real problems, not only in the US, but around the world. So I think it's just going to continue to grow. You're going to see amazing, amazing things and better user experiences being created from the fintechs that are out there.
Well, there you have it. All right, I dropped the link in the chat, Adam.finance. If you guys in the audience want to go check it out. I think you said, what, $7 a month for that app that can help you with, it doesn't matter how much money you're managing your portfolio, whether it's, so you can base, I could be managing, $100,000 and be paying only $7 a month for this. It doesn't matter how big your portfolio is.
We're just trying to get you the best information that all the institutional guys get. We're trying to get that over to everybody. Yep.
Wow, that's awesome. Well, it sounds like your guys' mission is very in line with ours here at Benzinga. So it's great to have you on the show today. Great to catch up about what you guys are doing. Would love to have you on again in the future.
Absolutely. Thanks for your time. Appreciate it.
Of course. Enjoy the rest of your Thursday.
All right. Take care.
All righty, guys. That was Ivan from Atom Finance. Again, go to adam.finance to check out more from there. Going to go ahead and log off here. Quick rundown on what's going on in the markets before we sign off on the day. S&P 500 trading around the highs of the day, up about 0.7%. 414.15 is your level on the SPY. QQQ is up about 2.5%. Also inching towards highs of the day. Their Dow Industrial Average coming up a little bit, down about 0.4%. So maybe some value names coming back a little bit. Either way, strong day in the markets thanks to NVIDIA. Put the team on its back. Maybe put its team on its back like Jimmy Butler's done for the Miami Heat, who will play tonight. You got the Miami Heat up 3-1 in that series. Should be an interesting game. I'll be watching. I'll be throwing some sports investments on that one as well. So we'll be back tomorrow. We'll be back later this afternoon with some more content. Hope to see you guys there. If you have not already, please subscribe to the channel and smash the like. With that, peace and love. Till next time.
This is Ben.